Alibaba's shares dropped to around $118 per share before recovering before the closing bell today. So what exactly is it that caused the shares to drop by 5% today? Well, it looks like a new article came out bringing up the concerns of a delisting once again. Let's dig into it. You're watching More Money? Let's get it. What's up, guys? And Alibaba did dip below $120 per share today. It was actually not the first time that it has dipped below $120. Back on December 3rd, it actually dipped down to $112 a share before recovering slightly since then. And what really caused this is that there was an article that came out that really spelled it out as a game over for US listed Chinese companies by a global investment manager by the name of David Lovinger. And he stated that he thinks for a lot of Chinese companies listed in US markets, it's essentially game over. And this is an issue that he noted that has been hanging out there for around 20 years and we haven't yet been able to resolve it. So what gives us any indication that this will be resolved anytime soon? He believes that there's no way that we're going to solve this over the next few years. And so I believe he reasonably concluded that he just doesn't think that China's government is going to allow US regulators to have unfettered access to internal audit documents of Chinese companies. Now look, I hate to say it, but I'm going to be as honest with you guys as possible. I do believe that there's a possibility that the Chinese government does withhold audit documents from US regulators in a bid for data security. That being said, I don't believe that it's a lost cause that this won't get worked out. Now, if you guys remember, I did touch on this previously on this channel, but Shen Bing, the Director General of the China Securities Regulatory Commission, did come out and say that he doesn't think that delisting of Chinese firms from US markets is a good thing, either for the companies, for global investors, or for Chinese and US relations. He went on to say that both groups are working very hard to resolve the auditing issue with the US counterparts, and the communication is very smooth and open. There, of course, is a risk of delisting these companies, but they are working very hard to prevent it from happening. So yes, as we've been mentioning all along on this channel, there is a risk of delisting, but I find it interesting that the news media only ever talks about the one side, and it's the one side that always pushes the fear, uncertainty, and doubt. And there's three items that I do want to get across to you if a delisting ever happens. The first item is just because a stock is delisted from an exchange, it doesn't mean that that stock stops trading. It doesn't mean that you lose your shares and the value of your position goes right down to zero. None of that happens. All it means is that the stock now begins to trade over the counter. And we've seen this happen before. If you guys remember, Luckin Coffee was actually delisted from the NASDAQ after they revealed a fabrication of $340 million in sales. Now look what happened to Luckin Coffee. Their shares actually declined to 95 cents a share in June of 2020, but then the shares actually rose after going over the counter and closed at $12.92 each overnight. So the point of that isn't to say that your shares are going to go down and then recover. That's not what I'm trying to say. The point that I'm trying to make is that the shares will still continue to get traded even if it's over the counter. Now, the second thing that I do want to get across is, and this is not a recommendation for trading or buying Alibaba or selling them. This is not a recommendation at all. But what I'm saying is, if the shares do get delisted, it could potentially be a buying opportunity if the share price collapses. Remember, you guys all have your own valuation models to suggest what the true intrinsic value of Alibaba is. My model suggests that the value of the company is somewhere around $300 a share. So if the share price collapses and it goes to around $25 a share, you absolutely bet that I'm going to triple or quadruple my position in Alibaba. That's for sure. And that really leads into the third item of consideration, which is that it might make a lot more sense for Alibaba to continue buying the ADRs if they're trading significantly under their intrinsic value. So they've already been increasing their buying back shares, as you saw in the second quarter of their fiscal year 2022. They actually increased their buybacks to around 5 billion and change from around 3 billion and change in the first quarter. So you can see that even if they just kept the same dollar amounts of buybacks going, they'd be purchasing back way more shares. And of course, I would think in that situation, they would increase their buyback significantly. It's absolutely accretive to buy back shares when they're trading significantly below intrinsic value, especially if the shares are around $25. So now you're looking at 1/12 of its intrinsic value. It's an absolute slam dunk to buy back shares at that point. So once again, I don't really understand this whole fear, uncertainty, and doubt of delisting. Where the stock trades means nothing to me with respect to what the share price is. If the share price continues to stay low, good. It allows Alibaba to accretively repurchase our shares. Now, I might be wrong on this analysis. Let me know in the comments if there's something else that I should be considering. Also, on this channel, there was a lot of good analysis over the delisting situation. In fact, the analysis ended up being so good that Brandon over at New Money actually gave a shout out on his channel. So I'm really proud and happy that that happened. If you want to access that research, you can click into right here.